Hey, will you look at that? Hi, I'm Scott Welsh, and it's the Beating the Market YouTube channel, and it's got a brand new design. What do you think about that? Let me know. I like upgrading, so I'd love to upgrade and get your approval, of course. Got a good topic for you today. We're going to talk about trading versus passively investing. And we touched on it a little bit in the newsletter yesterday. We're going to touch on it much deeper today. Three things that we're going to work on. Number one, if you've just come across this YouTube channel and you have money and you don't know what to do with it, today is your day. Or if you've been a trader, but maybe you've struggled a little bit, or maybe it's not going quite as well, or maybe you're catching some flack from some significant others, today is also your day to tell them to shove it. And trading is the way to go. You don't have to say shove it, but you can if you want to. Number two, we're going to talk about the irreparable, great word, harm of passive investing. And we're going to talk about the crippling limitations if you're not a trader. Wow, that's a pretty good case. Well, I'm going to make that case. First, though, I want you to get to know me. Building a proper YouTube channel and building our connection means that you need to know a little bit more about me. I need to know a little bit more about you. Well, here's a picture. I've been showing a few pictures of me each week. Here's a shot of me just outside walking around town. Again, I seem to have a problem with my shirt off, but there you go. That's a picture of me, and hopefully that brings us just a little bit closer. People talk all the time, and I read not maybe every day, but almost every day about passive investing and why it's the way to go. And if you don't know what passive investing is, it is when you put money in the markets and don't do a dang thing about it. It just sits there. In other words, this is index fund investing. In other words, that means you're just buying the market. And if the market goes up, you make money. And if the market goes down, well, we'll talk about that in a second. But passive investing means you put money in and that's it. You're done. You never touch it again. And people act like, well, it's a walk in the park. You take 10% of your salary, you put it in an index fund, the index fund grows, you're rich, you retire. It just seems like the greatest thing to do in the world. And that makes me angry. It is not a walk in the park. And why do people keep saying that? Well, let me explain. Don't take my word for it. Let me make my case. Let's use a different example first, shall we? Flying should be easy, right? Flying in airplanes, it's faster, it's efficient. You just have to sit there and you wake up in another spot exactly where you want to be. You're on vacation or something wonderful. It should be easy, like index funds. Now, the odds of dying in a plane crash, I hate to bring this up, but it's kind of cool. The odds are 1 in 9,821. Now, this includes private planes, which are slightly more dangerous, and air taxis, which are slightly more dangerous. The odds of you dying in a plane crash are actually much less if you only fly commercial, the big planes. They almost never crash in America. Are you aware of this? Millions and millions of flights and no crashes. I think 2016 for sure was a no crash year. Well, I don't want to say for sure, but there hasn't been a domestic crash in millions and millions, tens of millions of flights, okay? It's safe. Now, the odds of dying in a car crash are 1 in 114. Okay, you could fly every day on a plane for 10,000 days in a row and be perfectly fine. You can drive in a car for not even, 4 months and get into a wreck. Not even that, dying. 1 in 114. Holy moly. Cars are awful. Cars are dangerous. Cars are so much worse than airplanes. But no one is afraid of driving in their car to the supermarket. No one. 16-year-olds are craving to be in their cars. They can't wait to be in their cars. And yet, I've met a lot of people, and oh, I was one of them. I went through a fear of flying phase of my life where I did not want to fly at all. It was too scary for me. I've gotten over it with the help of some good books. But anyway, I've never felt one time, oh, I don't want to get in my car. The odds are 1 in 114. So planes are safer, yet people are petrified of it, right? I already said I was afraid. Whole sections of bookstores can be found on the subject. That's where I found my book. Doctors, mental doctors, therapists are employed to help people with their fear of flying. I've read many accounts of celebrities who couldn't do their job because they couldn't fly. Right? Entire lifestyles are changed. Other celebrities have bought a Winnebago bus so they can drive across the country. People don't want to fly, and it's way better. Isn't that crazy? This is what petrifies people. Look at that. Beautiful blue sky, flying serenely, right? And yet that's what everyone is afraid of. Why? Okay, I'm getting to the point. Bear with me now. We are scared of planes and not of cars because of one overriding massive thing: control. We can't control what happens to us when we fly, and that's mortifying. It's terrifying. A little bit of turbulence. I can't fix it. I'm sweating. I'm dying. Right? I'm breathing heavy. Whatever. Little turbulence is not unsafe. Right? Turbulence is nothing. Planes don't crash from turbulence. Then why am I sweating a year and a half ago or 2 years ago, right? It's ridiculous. But we can't control the outcome, so we're mortified. Now let's circle back around. This same pathology applies to investing, specifically passive investing. It is way worse psychologically to have a passive account drop to nothing or even drop at all, like turbulence. Even a little drop is like 6 inches. Oh, it's turbulence. 10% drop in our accounts. Whoa, that's trading turbulence. But it's way worse to watch an account drop passively than it is to be a trader. Traders struggle, right? We know the stats. But by and large, in my experience, traders don't quit. I've met more people, two specifically, dramatic examples, but more people who've gotten out of the stock market who were passive investors, just put it in a fund and looked at their reports once a month or once a quarter, and it went down. People were shaken out of 2008 and have never come back. I know people who have never come back because they passively watched their account drop and they never wanted to go through that again. It is way worse when we're out of control, which is why this, I don't want to say lie, but this methodology that is being peddled to us from the experts, from the smartest people in the world, that say you have to be a passive index fund investor because that's the way to go. It is not easy. It is way easier, I submit, to be a trader. And that's why being a trader is the best way to handle your money. But I'm not done. Do you realize how limited passive investing is? Do you realize this if you buy index funds? Do you have any idea? Again, the picture is rosy. The market goes up over time. I'm doing a little dance. Can you see me? The market goes up, everybody. Since 1929, the market's gone up. It goes up every year. Stocks go up. Stocks are the greatest wealth creator in the history of mankind. Well, maybe they are in some circumstances, but they weren't index fund investors. The people who have made the biggest wealth. Anyway, another topic. I submit to you further. I have two submissions today that traders of trading stocks are the biggest wealth creators. But that's besides the point. No, it's sold to us. The market goes up. Hooray. But how much does it go up? right? Market goes up, fine. What is the upside really? All right, here are the cold hard facts. In the past 20 years, the best return on the market, quote unquote, was 37.6 in 1995. Okay? That was a while ago. And since 1955, that was a long, long time ago. The best return on the Dow, which is a smaller section of the market, S&P data doesn't go back. Dow data goes back to the 20s. So I went past the S&P data, the SPY data, all that data, went to the Dow, and the best return on the Dow since 55 was 38%, about the same. That's it. That's your big windfall. Now, don't get me wrong, that's phenomenal. But it's a one-time thing, and that's as high as it goes. Think about this. You get the terror like a fear of flying. You get the terror and only get 38% for the upside. And that's in the past 60 years. You get the terror, you get the drawdown. There's been a 50+% drawdown in the past, 10 years? And yet we can't get above 38% or 39% in 50, 60 years? We get the drawdown, but we don't get the upside. And what are most years? 5%, 12%, 7%, right? The market average is about 8%, right? So that 38 is an outlier. Do you see what I'm saying? Trading, on the other hand, is totally different. First, there's no psyche damage. Well, that's probably not fair, right? Nobody likes a losing trade. But it's not the kind of psyche damage that is the fear of flying or the fear of passive investing. Sure, we all get scared in a car sometimes. Ooh, that guy almost hit us. That was scary. But it's over, right? Trading, there's psyche damage. But by and large, it's over. Now, think about this. If you are a trader and you made 20% on the year, that'd be fantastic, right? Way better than the market average. Awesome. And someone else or you in a previous year got 20% passively investing, 20% trading would be better psychologically because of that fear of flying passive horror show that comes with trading that way. Of course, it's nice to sit back and just let the money work for you. I suppose that would be great, but we're not talking about when it's great. We're talking about when it's bad, right? Think about this. It's no different than a successful car ride having no emotional residue, right? Unlike a successful plane ride, which does, whoa, I made it safely, right? When you're scared of flying and you land, it's euphoria. Nobody gets excited when they drove to the post office, like, oh, I made it to the post office, right? Maybe we should, right? But I'm just saying that trading, when it's active, leaves no damage residue, doesn't leave you shaken or overly euphoric. It just is. Whereas passive investing can't. Now, let's move on to what trading can do. I personally traded a robot that made 100% in a year. And that's really when I decided that I wanted to help people and sell robots because I saw what it could do. I had ideas that it could do it, but I wanted to prove it. I wanted to see it with my own eyes. And that was an eye-opener. If you want to find an account of that, go on my website, scottwelsh.me, and hit the search button and search for 9 lessons I learned making 100% in a year, right? And it's a blog post I did a while back, and you can read all about it, right? But making 100% in a year on a small account, of course, because I'm a chicken, at least I was then. Making 100%, let's see, that is better than 38% once every 50, 60 years, right? 100% once is better. There are no 100%ers when you're passive investing. It does not happen. And furthermore, I don't think it's a fluke that that robot made 100%. I think it can happen again. Maybe not 100%, but way over 38 and not just once. I think 38 plus is very possible. Dare I say it, maybe even fairly often? Is it possible? I don't want to fill your head up with wild daydreams, but I'm just saying I've seen research on my systems and I think it's possible. I don't think it's a fluke. But anyway, if you want upside, guess what? It can happen through trading and it will not happen in passive investing. So you get the fear of flying and you get the downside, but you'll never get the upside. What's the bottom line for today? A trading system is one, a better way for us to invest our money. It's better for our psychology. It's better for our everyday life, not worried, not getting out of the market, not panicking. And it keeps us in persistent, right? We are persistent when we drive. Nobody stops driving. When you're trading, persistence is so much easier. And two, trading is better because it has way more upside. Remember, we've talked about it in the weekly newsletter on Wednesdays. Sign up at scottwelch.me. We've talked about it in these YouTube channels. We've talked about it in my podcast. A turtle-based breakout system, just on turtle rules made in the 80s, does better than the market. That's trading, and it beats it by a substantial margin. My breakout systems, which are based on the turtles but are slightly different, destroy the market when you keep the drawdown the same. Double the market. I have back to the pivot point systems that beat the market. I have back to fair value that slightly beat the market. There are even passive ways like doing a magic formula value investing system, which is trading because you're revamping once a year. You're not just leaving it in forever. Even passive things that have a little small element of trading beat the market and are better psychologically. Do you see where I'm going with this? I am trying to overwhelm you with systems that do better than the market. I'm not going to stop either. I'm going to pummel your brain and ears with ways to do better than the market. Am I getting through yet? Am I making you a believer? Because I want your money to do better than nothing or the market. That's what I want. And there's no life-changing moments with passive investing, right? I mean, unless 38% is a life-changing moment, and maybe if it's you're investing $50 million, I suppose. But trading can give you that life-changing moment, that one breakout trade that goes for a huge win, the big short when you short the housing market and you make a big windfall, or you have a trading system and you get 20 consecutive wins in a row, like the 9 lessons I learned. That was a short-term day trading robot with small wins that went on winning streaks and racked up big gains overall. There are life-changing moments with trading and not in passive investing. And speaking of life-changing moments, I've been doing a lot of research on that, and we're going to be talking about that very soon. All right, let's wrap it up as I skipped over latest updates. You can find all my courses for now on Kajabi. I'm messing around, maybe moving them somewhere else. Should I? I don't know. But right now they're at Kajabi Next, and that's fine. Over 1,100 on YouTube now. We're growing like wildfire. If you want the newsletter, go to scottwelch.me. And there's my email again. I highly recommend at the bottom talking to my friend Justin Hertzberg at Forest Park FX. If you want to trade Forex on MT4, please go to Justin first. You get someone who will do the work for you, and also you get rebates. I don't get paid. He's not a sponsor. I just wish everyone would go to him, especially if you want to buy my robots, because it's such a good setup for you. All right, everyone, that's it. It was fun being here. Hope you like the new setup. I'll be back next week with more fun stuff. Bye for now.